man, $1 trillion wiped out in liquidations. We've seen an incredible dump across risk on assets over the last 24 hours or so. In this video, I'm going to break down exactly what we are seeing, why it's happening, and how much further we could dip here. I'm also going to share my game plan in this market. If you appreciate these updates, smash up the likes. Do not forget to subscribe. As always, guys, if you want to trade with me, you know where to do that. ijazzcrypto.com/TG is where you're going to do that. Now, we need to have a chat. A couple of days ago, we spoke about this rotation that is happening. I'm one of the first crypto channels out there talking about this rotation effect. And this rotation is continuing. This selling away from the tech stocks that did so well throughout the down period, right? When I say down period, the bear market, the steep interest rate climbs, the horrible inflation figures we were getting, tech stocks were the saving grace of many people's portfolios. Crypto held up well as well. And so now we're getting a rotation. We're getting a rotation away from the NASDAQ, which had its worst day yesterday since 2022, into some safer plays. So you're seeing that risk on assets are being dumped. They're being dumped painfully across the US market, across the Asian markets in the early hours as well. Now, the reason for that is when you have an interest rate cutting cycle, which is what the market is expecting, right? That's what's causing all of this right now. Market's expecting rates to get cut in September. We covered that off in yesterday's episode. And now, in order to prepare for that, they want to rotate away from tech into some of the more Dow Jones plays over here, into more of the Russell plays over here. So you're seeing them coming out of some of the typical plays, your Meta, your Apple, your Nvidia, all those kind of stuff. And they want to go to more infrastructure, agriculture plays, some of the traditional banking and blue chip plays. That's what we're seeing in the market. Now, what that therefore leads to is your typical crypto indices getting a little bit of pain, right? Red across the board here for Bitcoin, for Ethereum, for altcoins. Quite a big dump here. But it should be expected. It shouldn't be anything that you've not expected, particularly if you've been following this channel. We were speaking about this rotation coming to fruition, and we're seeing it. Now, is it something to worry about? No. Longer term, if you actually look at it here on Bitcoin, we're still above our weekly EMA ribbon. We spoke about this consolidation pattern. We spoke about as long as we can hold within this pattern, there's a big chance we can get the next leg up here because we're still in a bullish pattern here. We're still above our EMA ribbon. That being said, we have to be realists and we have to notice that we got rejected here. It's a lower high here. And it looks like we're forming another lower high here, right? Save a bounce and a big candle, later on this week or next week. Saving that, it looks like we're creating a lower low. And that's a little bit of a problem. If we do get that, this continues, don't be surprised to see lower price points, right? Us working into our EMA a bit longer and getting some opportunities to buy the dip. Maybe we're going to get some buys back again here at the 57, 58 mark. Maybe we're going to need to come a little bit low into the EMA ribbon to test this green line here maybe somewhere. Either way, I think this is still just a consolidation for a bigger move that is expected later on this year. And the fundamental thesis for that in terms of how I see the market is as follows. Bitcoin has been through its bear market. Bitcoin has had its 4 yearly halving. Bitcoin has now got its ETF, which we've seen has had a decent interest in terms of the flows coming in. Bitcoin has navigated all that difficulty, and now we're heading in towards a rate cutting cycle. Now, granted, that rotation will see money flow into some risk-off assets first. But once that money starts to flow in, once those cuts have been done, you'll start to see more people have money in their pockets. And whenever you've seen crypto do well, it's when there's excess liquidity in the market. We need global liquidity to come up. We need people's mortgage payments to go down. We need their car lease payments to go down. Because guess what? When that stuff happens, people have got an extra little bit of money to invest in crypto. That's for the retail investors. For the institutional investors, and we spoke about this yesterday as well, I think this cycle is different for a fundamental reason. The ETFs. Please do not underestimate the impact these ETFs will have. You've got major investors now looking to rotate and reallocate their portfolio. And I think a big proportion of those will start getting a little taster of Bitcoin Ethereum. I think some of those institutional investors who's kind of just juggling their plays, maybe selling some Microsoft, selling some Apple, selling some Meta and getting some of those blue chip plays, maybe their wealth advisor at BlackRock, Fidelity, Wisdom Tree will go, hey, we've got the Bitcoin ETF open. You've got the Ethereum ETF. We're expecting a bull run now. Do you want a percent? Do you want to allocate a percent of the portfolio into Bitcoin and maybe 0.5% into Ethereum? Don't be surprised to see that as a bigger and bigger narrative going into the next few weeks and month. Ultimately, look at where we're at, guys. I mean, we're at a point now where we've pretty much finished this rate cutting cycle. I mean, shout out to all of you guys. The steepest rate hiking cycle we've seen in a very, very long time. Now coming to an end, right? We got an FOMC meeting next week. Markets aren't expecting a rate cut. But come September the 18th, which is not a long way away, markets are expecting at least one rate cut. And the reason I say at least one, yesterday we spoke about the fact that a cheeky 10% were pricing in a 50 basis point rate cut, right? Which would be like a double rate cut. Well, guess what? That's just notched up to 13, which is particularly interesting. In other words, this is what's creating that pain in the market. The fact that the investors are thinking we're going to get one rate cut and potentially a double one, i.e. 50 basis points in September the 18th, they want to rotate their portfolio. And that is exactly why 4 or 5 days ago, I think it was, I made a video with the thumbnail, 62 days. 62 days it was at the time until September the 18th. That's the time you had. And in that video, I in fact said, guys, you have less time than that. This market is shifting fundamentally. And if you don't get your portfolio right, if you don't get your allocations right, you could be missing this next big bull market. And I don't just mean a bull market in crypto. I mean a risk on market in terms of stocks. I mean a risk on market in terms of luxury watches, in terms of all the kind of things you'd expect in the market that do well during a hype cycle. The last one we saw was post that COVID pandemic period where we saw everything was going through the roof. For me, I want to be in the market for that. I'm not going to get shaken out by these momentary shakeouts whilst people are reshuffling their portfolios. I will simply look at the chart and I'll say, you know what? I'm not too worried. In fact, if I drop this down to the daily chart, is there anything to be worried about this? The fact that we're in a sideways consolidation? No. The move we've had here over the last kind of couple of days has moved us down into our EMA ribbon, right? If we lose our EMA ribbon, then fine. Maybe we will start following some of the arrow I shared with you here in terms of the pullback on the weekly chart. But right now, we're in a good position. We can get a bounce off this EMA ribbon, go try to break through this top pattern here, then things can be back into the bullish bias. And I think that's what's important. I'm not going to be shaken out. If I see nice prices and I want to add to certain altcoins, if I want to add to my Phantom, if I want to add to my Solana, if I want to add to Cardano or any other projects, I will look for those opportunities and I'll add, right? And same for Bitcoin, Ethereum. I won't forget to eat my veg. Hopefully you guys found this video useful. If you like this type of content, then please do smash up the likes. Do not forget to subscribe and I'll see you in the next one.